Hello there, just going to have a quick video review of yesterday's market, FTSE 100, 12th of the 12th of the 12th, fairly auspicious date, sorry. This is what separates, I think, the amateurs and the professionals, is knowing when to trade and when not to trade. I think knowing when not to trade is vastly more important than when to trade. For those that know anything about what we do, or me in particular, I do the London session from, well, 7 o'clock. We do look at the DAX, but I don't tend to do anything on that unless we see something spectacular. But I tend to look to trade from 8 o'clock up till lunchtime, and normally I've made a trade and that's it. And we have other moderators in the room that can look later on. But you know, my goal is I set out for a working day, I try and make some profits, and when I make some profits I'm quite happy with that. And there's no right or wrong answer, and that's not really the purpose of this video. Some people say, you know, why should you stop after you've made some money? Well, you know, everyone's different. But, if you trade multiple markets, then we'll give you multiple entries. But I personally only do this. So when we've made our targets, then we're quite happy for that. But that's why we treat trading as a business. And this is why after this week, even though it's now only Thursday morning, I'm not going to be down for the week, because if I trade again today, I'm only going to lose one day's money. That means I'll be up for the week, which is why I've only had 2 losing weeks in well, over 2 years now. Trading as a business. But anyway, to get back to the point, it's very, very frustrating to sit there with nothing to do. And we called yesterday to our members, and a little bit on public Twitter. And we don't tend to do too much on there. You know, we're looking to go long on a pullback on the open, and our entry point was 10 and then 0-0, but we didn't get down that far. We got to 16, as you can see, after 8 o'clock. So we were all sat there. We had 30 odd people in our live room. You know, everyone's itching to trade, and I'm not bothered. I can sit and wait. You know, if I don't get a trade, I don't get a trade. I'd much rather sit and wait than get in the wrong trade, obviously. Again, which is a fact that a lot of people can't get their head around. You know, the spread breaking companies, you know, don't help in this matter. They want you to trade, obviously. They're making the spreads, and if they're the market makers, they're making money from the 80-90% of people that lose. So you know, you need to put yourself in the bigger picture. So you know, there's nothing to do on the first spike down, but as soon as we saw price, one of our moderators got in a bit earlier than me. When price stalled down at 16, I waited for this final test down here. And you just draw a line under here. This is why you get great risk reward. You can draw a line. I'll just do that for you now. You just draw a line under the low. You can see how we've had it's a very tight double bottom. But again, we always have this concept. You can just put a hash line. You know, you can shade all this in. I know some people do. You can get on other charting packages or indicators. You can't do it on these time to trade charts that capital uses, which are the only ones I use. You know, you just want to put a hash zone down here, and if the market goes into it, you get out. Very tight stop. Good risk reward. And then we bought. I got in at 16. Well, probably after the spread of 16.5 or something like that. Sorry, 17. And then we just brought it all the way back up here. You can see a bit of profit taking. Up at 30. You know, 23 has been a level for the last. Well, it's been a big level for the last few months that we've been taking off, but it's been validated now. And again, I called that in the email and on members' Twitter. Don't worry about 23. It's not going to be in play today. So we took some profits up here, got out for the day, and you know, hopefully quite a few of our members did. I know obviously people in the room did, but that's probably only half our members. Other people have got jobs, and they're just on the members' Twitter and the email and stuff. And then, you know, you are literally done, because we said in the morning email, you know, we've got UK unemployment data at 9:30, then we've got USA data at 1:30 and 3 o'clock. But the whole market is going to be waiting for FOMC, and look exactly what happened. And we do have people in our room all day, and they are looking to trade, and it gets very frustrating because there really was nothing to do. From 9:30 yesterday morning until 6:30, well, even probably later, 6:30, 6:45 yesterday evening, There was absolutely nothing to do, and people need to get their head around that. There's a reason why 80-90% of people lose in this game, and it's because they trade for the wrong reasons. It's like there's a blog post up, I think it was last one or the one before, about this is different. You go to a job, and you go to work, you clock on, and what do? You have to work. You can't sit there with your hands behind your head listening to music and watching YouTube like I do. And when your boss comes along and says, "What are you doing?" He says, "Oh, well, I'm just waiting for this letter to arrive." But it's just not acceptable, is it? You have to be working. If you have nothing to do at a job, an office job, say you're an invoice clerk or whatever, what do? You make yourself look busy, or whichever way. But markets don't work like that. You have to sit and wait. And we're saying all day, FOMC, you need to wait, and exactly what happens. There's no way you can get in on this peak up. This is all news related. Plus they had the FOMC press conference. But as soon as you see these highs at the 60s, that's new highs. We were up at 33 or whatever it was on the last spike up. And then you can act. But you've got to have patience, discipline, and all the rest of the boring stuff that we teach that not a lot of people, well, other people do teach you it, but they tend to teach it at the end. You'll do an hour's class and you'll get 10 minutes at the end. It's all about setups, it's all about market sentiment, it's all about technical analysis. Well, it is, but they should go second or third or fourth. Patience, discipline, money management, risk management, getting your head in the game, getting yourself in the zone, and all the boring stuff should be number one, and that's what we promote. Then after that, it was quite a safe trade, but you had to wait, and hopefully, a lot of people that listened to what we said all day, sat and waited and came back at FOMC. You don't have to sit and work all day, every day. If you're only a full-time trader, then enjoy your time off. Go and do something else. Go for a swim. Go watch a movie. Do something else. The market will always be here. The trick is making sure that you are. Anyway, that's just a quick update of why you need patience and discipline, and why if you try and trade one market anyway, all day, every day, it'll mess with your head. And there really is no need. You can be profitable just taking 2 or 3 trades a week. All that matters is if you're profitable. It doesn't matter if you take 50 trades or 2 trades or 1 trade. Use our spreadsheets, use compounding, and that will make you rich for the right reasons. Anyway, and hopefully you can get a little bit out of that. Patience is key in this industry, for definite. Okay, thanks very much, and I'll catch you later.